Welcome back to The Ride. It's the Ball Headed Barbershop. Y'all, it just never stopped with TikTok. Paul Rivers, Sterling Steve. You buffering again, dog?
I'm buffering.
I had to take a second.
I gotta get. Oh man, that was the wrong. But I had a stupid look on my face with that buffer. You gotta be when you buffering. You gotta be a smooth. Like,
no, that's not smooth. That's not smooth. Still not smooth.
Whatever.
Still stupid.
I ain't buffering no more. Anyway,
but
that's why because I ain't buffering no more. Whatever.
Man, again, we got company. You all out of pocket, out of bounds.
I know, out of bounds.
Yo, you notice most times it's being the partner in crime, Paul, but we have a guest this evening, a true licensed insurance professional. Now, the stuff that Paul and I give you on a weekly basis, those little tips and pointers where I have to put the disclaimer out there, no disclaimer needed because my main man, Kadari Samaru, aka KD, is a licensed insurance agent in how many states?
Honestly, right now, several, but I can get licensed in as many states as I need be.
So basically, if they need it, you're the man to make it happen.
I'll say every state, including Puerto Rico.
Bienvenidos, Puerto Rico.
Telemundo.
Salvador, goddamn. Shout out to all our Latinos and Latinas.
Mm-hmm.
Hola, como está, and everything in between.
Me llamo Pablo.
All I got
I'm
is
bilateral too, brother.
You say you what?
Yeah, I'm bilateral too.
I thought that's what you said.
You remember the commercial, bro?
I don't.
See,
What is it? Tell me.
Myself.
What is it?
There was a girl showed up at the door to my 2SR, something I blow, to my I'm bilateral. Anyway.
We had cable. I don't know what kind of little TV you watching, man. All right, so I'm going to act right. Y'all, we're going to give you some real good information, some actual factual information.
Mm-hmm.
We're going to give it to you lighthearted, but it's nothing to joke about.
Yeah.
And the truth of it is, everybody says, I wouldn't be caught dead with X, Y, or Z. But the truth of it is, you don't want to be caught dead without life insurance.
Yes.
You agree with that, Katie?
100%.
Absolutely, man. I've been looking forward to this conversation for a minute because, I know you're going to where we met, but I got some questions for Brown.
Okay. So to give you some background, we did a financial wellness symposium a while back. Shout out to Bridget Beasley and Valley Bank.
Yes, indeed.
You know, shameless plug for you once again, Bridget. It's not going to cost you a dime, but the next one. But no, Bridget, thank you for bridging this gap and introducing us to KD. But we met him during the symposium, and this brother is extremely bright and talented, knowledgeable and quite personable. So he gets the Ballhead Barbershop stamp of approval. And you give him the big stamp?
Oh, yeah, you heard it.
I mean, I just gave him like the company stamp. You gave him the corporate stamp.
Yeah, that was it, boys. We raise up.
Yeah.
You hit it down so hard that it raise up. That's a stamp.
Wow. Okay. So, Katie, in your line of work, I'm sure you have seen some interesting scenarios. I would dare not ask specifically, but our demographic, we cater to typically people of color. We're not limited to, inclusive of all. What are some of the greatest needs that you've seen for insurance needs, life insurance, health insurance, in the African-American community?
So that's a great question, right? What I've leaned into lately, more than I have in any prior month or prior year of my career, is more so speaking about the need for long-term care. Mm. Because the need for long-term care can be the single most devastating thing that can happen to anybody financially in retirement. So when it comes to us, if we've known somebody, a friend, a family member, someone we know, love, trust, and care about, that's had cancer, heart attack, stroke, some sort of critical chronic illness, of Alzheimer's, dementia, things that we see more and more often based on a number of different variables. Right. If you do not have a proper plan in place to account for the long-term care need, no family member, especially no parent, wants to be a burden upon their children. But if they do not have in place, what choices do you have?
Yeah, wow, that's...
I mean, what you've liquidated all of your cash on hand. You start liquidating assets. And now you're looking at, instead of generational wealth, creating generational debt.
Correct.
And then on top of that, oftentimes you'll get in a situation where the parent becomes a dependent. It's either going to require you to hire, 24/7 care, or it's going to cause you to have to back off of your work to provide that care. Because I've seen that happen in a number of occasions. So, and you're right, you're paying for all that.
I went to a Medicare seminar recently,
Mm-hmm.
and one of my biggest takeaways was something I already knew, but it's good to hear it from another side of the aisle.
Okay.
Long-term care is not covered by Medicare. And I had met someone who was there who had to retire early to take care of her mother who has dementia.
Wow.
But when you think about this, how many family members or friends do we know that are qualified to be able to assist people on a long-term basis for these great needs, right? So you're looking at it. These things can run $3,000, $5,000, $7,000, $15,000. You might have skilled nursing care, $18,000, $20,000 plus dollars a month.
Right.
Jesus
And that's
Christ.
going over and over and over. So
unless you got really like abysmal debt pockets, it's not realistic to go with the route of not having insurance.
absolutely.
So how can someone know how much insurance is the right amount of insurance to have?
Okay, and even further that, the long-term care that I'm speaking to, because there are standalone long-term care policies.
Okay, so when you say standalone, in addition to a policy that exists,
So you can have life insurance,
right?
you can have a long-term care policy, which will only react in regards to a certain long-term care need. Or you can have a hybrid, where it's not only long-term care, life insurance, but it includes long-term care as well. So you can use the death benefit or the face value of the life insurance policy while you're alive.
Mm.
Someone even asked me, they said, do I have to use the money for medical costs? And I said, well, I mean, if I were making a suggestion, I would say cover the medical costs.
Life or death to get a new roof.
I mean,
Yeah.
right. They might.
It's life or death.
Right.
If I don't get that new roof and that new flat screen TV,
Don't
I
worry.
might die
Uh-huh.
tomorrow.
Mm-hmm. Some people, it's a tough conversation, but there was a book I was reading, and the example they had is like, it might be better for your family if you weren't here that long, because the money that you bookmarked for your spouse, for your kids,
Mm.
for their retirement, for the legacy, now is going to be
20-second
bookmarked
time out.
for long-term care.
You said what?
Yeah. That was the example. If you're sitting there talking with somebody, let's say you've worked a lifetime.
Have you had to give somebody that advice?
I hadn't, but this was the
God
example.
already.
This was the example that was listed out there because there's just a lot that's
Man.
going along.
So I have elderly parents,
Mhm.
and I'm sitting here thinking about it. Bruh, I'm fortunate to be my age and have both my parents in reasonably good health.
Beautiful.
But if I had to make that financial decision to even be in the thought process to say, I can't even formulate my lips to say it,
Mhm.
and I'm not in that situation.
Right.
So I can't imagine how you would feel suggesting such a thing.
It's not that I would suggest it. It's more so just saying that if you, once again, it goes back to, I don't believe any plan is properly accounted for if it does not include this. Now, if I were to give some statistics, right?
Okay?
Either one of you gamblers.
I mean, I know about blackjack.
Okay, so you know about it, right?
Right.
If you had a 40% chance of losing, would you play?
Probably not. No.
Maybe. So
It
60,
is
so
questionable.
60% chance of winning, 40% is questionable. What if you had a 72% chance of losing?
I'm not playing.
You're not playing.
I'm not playing.
There's a 72% chance that one of the spouses will need long-term care in their lifetime. Some sort of long-term care need,
So almost 3 out of 4.
essentially. Just stats, right?
Wow.
So when you're looking at a plan, and this is, like I said, I can help any state. Just throwing that out there. But in Florida, give me a guess. What do you think it would cost on average right today? It would be on average for long-term care costs on an annual basis.
Annual basis, long-term care. I would imagine that it's 65-year-old versus a 25-year-old. It's going to be some cost difference. But I would say a mean should be, I would say probably like around maybe $1,500 a year.
You think it'll be $1,500 a year? $1,500?
Yeah, that's what I'm hoping.
I was thinking more along the lines of maybe $2,500 a month.
25. What would you?
100 to 200 a year.
No, we talking about the cost of the policy or
No,
you
I'm
talking
talking
about
about
the care
I'm
itself?
talking about the care. The care
Oh,
itself.
okay. Well, did I rescind
Okay.
my
that was
50? I was
really-
talking about the policy. You know what I
No,
mean?
I'm talking about if someone had right now, what is the average cost of long-term care in Florida? I'm just curious what would you guess?
Annual, I would say probably about 125,000 a year.
Okay. And you said 2,500 a month?
That's what I said.
You're guessing, you said between 100 to 200. You're very close. Right now it's about $117,000 a year.
Yeah, it's not
Averages, right?
wow.
And if you have a need that's lasting 5 years, that's nearly $600,000
Wow.
over the course of that amount of time. So regardless of what your 401k has, your 403b,
Right.
your stock portfolio, your crypto,
Right.
maybe even your real estate, how quickly are you going to tap into those things that you mentioned earlier to
And
be
have
able to take care
liquidate
of these
it.
needs?
Right, not my crypto. So,
Yeah.
are there any advantages? I know you were saying we could either go with an insurance policy by itself, combined with a standalone long-term care plan, or do a hybrid. Is there any advantages to just having one hybrid or having both of them separate? Like, do the standalones give you something that a hybrid doesn't? Anything like that?
So the challenge with standalone long-term care policies, they're hard to really rate for.
Right.
And in a number of them, they can change the rates at any time. Because the challenge when they had them once upon a time is they had a certain figure, like, okay, people are only living up to X amount of age.
But you outlive the policy.
But now more people are living longer than when they initially rated the policy. Either I have to raise the rates in order to keep what we currently have in place.
Mhm.
But now what happens to the people that bought this policy 20 years ago
Mhm.
that now have a fixed income that are looking to do certain things?
Right.
So if I were making a suggestion, getting a hybrid and ensuring that your life insurance policy includes, not just includes at a cost, but includes cost-free, the long-term care need would put you severely ahead of,
So for the
said
person, who just is looking at that screen and says, "What'd you say?"
Mhm.
Give that in a more simplistic term.
Okay. So not all life insurance is the same.
Okay.
There are companies that provide life insurance and there are carriers that provide life insurance with living benefits
Mhm.
and or long-term care. They both go hand in hand.
Right.
And then even then, not all long-term care is the same. So you know what it's like? If I were to say, you have an iPhone, right?
Right.
You have an iPhone.
Mhm.
Your iPhone has one camera. Your iPhone has 3 cameras. Which would you prefer?
Mine.
3 cameras, 1. If I told you they were the same price, which would you prefer?
3 cameras.
Straight down.
Okay. Yours has more features, right?
Right.
What if I can get you the same iPhone for less than the camera with 1? You'd still prefer the one that you have, right?
Correct.
So life insurance has evolved. There's old life insurance and there's new life insurance. The new life insurance also includes living benefits and long-term care. And even further than that, there's other iPhones that got 3 cameras and a special flash and some other things and some other features. So even within that, there's additional riders, which are added benefits, such as, like I said, some might trigger when you're diagnosed with Alzheimer's, where now you can turn on this rider, or you have this rider included. I can now access the cash and the death benefit because of the diagnosis.
So here's a question as we sit here in dialogue.
Wow, that's
Is
good
it-
information. That's good.
That's very good information. Is it safe to say, or is it possible for someone to do an audit on the insurance that they currently have?
I would say get with a professional and to be able to look over.
You know any insurance professional?
I would happen to say that if I were looking for one, I would find one that was like tall, charismatic, preferably wearing glasses, long locks, you know what I mean? Dressed pretty good, dapper individual who happens to take a sip every now and then. I
No.
think that would be a great person.
Never seen that guy before in my life.
I'll be here all week.
But yeah, I would look over it and then see, is it included? Because some people say, oh, I can get that, but is it coming at a cost? So for example, going back to the iPhone, if you can both get it, you're getting it for free, you're getting it for a cost, which would you prefer? Right?
Right.
So you can shop around, you can look, and not everybody offers it. So there's a number of big name brand companies out there that might specialize in auto and home. That's phenomenal.
Mhm.
However, if their expertise is not necessarily life insurance, I would look for someone whose expertise is, that would maybe be a good direction as far as a place to be able to start,
Right.
because it can seem as if it's more of an add-on. I can offer life insurance, but is this really giving me the most features, the most benefits of the current, new, up-to-date life insurance?
Gotcha.
And I think that's an important distinction we need to make for our viewers, man. It's such a difference when you're talking about stuff like this with somebody who thinks they know something versus somebody who does. People get with a professional. A lot of times we sit around here and we getting advice, life changing situations,
Because it
getting
sounds
advice from
good.
people that don't have all of the information, man. Had we not had your expertise, I wouldn't have known. Now I know what to look for in a policy. You know what I'm saying? And I wouldn't even thought about that.
Even further, some people think long-term care is long-term disability or short-term disability,
Right.
but there's a
It's
difference,
distinctive.
right? Some people might also think about, okay, well, I do have long-term care that's included in there, but it might only be terminal illness. Terminal illness means you only have between 24 and 48 months to live. And now I can access my money while I'm alive. But essentially with that kind of diagnosis, you're only alive for but so long.
Right.
That seems to be pretty standard.
Right.
Terminal illness is standard. But what if you live? You know what I mean?
Right.
Right.
Chronic, critical injuries even. Like things happen to people.
You get
You know, I've met,
paralyzed or something.
I've talked to some people about it. You know, their grandparent fell off the roof. Life's been different since then.
Right.
Other people, pre-Alzheimer's at 55, full-blown Alzheimer's at 59. Things have to be accounted for. Having a stroke in your 80s, 90s, and you're still around. So once again, if family members are in a position where they have to care for you because they can't afford the other care that maybe be more proper,
Right.
more suitable to really, you know what long-term care really is? Long-term care within your life insurance policy allows you to have the opportunity to retain your dignity.
Mm. Well, Sterling ain't got none.
No, I mean,
What about the people that ain't had no dignity to start
No.
with? Really give
no,
them something.
believe it or not, it's funny you say it. I'm sitting here thinking, when you said the person who has a stroke, man, I can't imagine the burden.
Right.
And of course, you know, Mama says, I don't want to be a burden on you. Mama, you're not in a burden. You're my mother. But the truth of it is, you may do it out of love, but it's going to take from your household.
It's going to take.
It's going to change your way of living.
Right.
Let's say you're making $150,000.
It's a labor
a
of
year.
love, but it's still a labor.
It's a keyword labor. It is work.
It's a
Mama, I love you, but
I done
back
seen
to what you said, I love you, but man, it'll be more convenient for you no longer to be here.
That's it's a thought. And you know, some people, when they're in these certain situations, like you have a particular will to live, right? And then some people might say, you know what?
I'd just rather be gone.
Man, I remember my grandma was saying that. She said, I'm worth more dead than I am alive. And I was like, wow.
Yeah, that's
I don't
the
want you to
hurt.
think like that.
Exactly.
Mhm.
Exactly.
You don't, yeah.
You know, it's the reality, man. It
But
is
man,
the
that's
reality.
I mean, we just on the death
And
benefit part.
that's just really, like I said, I'm leaning into that because it's something that I don't believe is spoken about enough.
Right.
It's something that people don't really think about.
Mhm.
People might think for the youth, they might say, well, I'm too young. I don't need to think about that. But you know when I told you those numbers?
Mhm.
I said that 40% chance, right? I was talking about 40 and 72,
Right.
right? That 40% chance is for the younger individuals, people under the age of 65. So it's still possible that you might have a need
Anything is possible.
that they will need to be accounted for,
Yeah.
right?
Mhm.
And the sooner you get it out the way, just the better in general.
Right.
And what you just said, what's a good age or time to start thinking about getting life insurance?
If I were to make a suggestion, I would say when you're 14 or 15 days old. Because the earliest that you can get life insurance is at 14 or 15 days old.
Wow.
So if
Just be covered.
it's not if,
It's when.
it's when you're going to take advantage of this. So it's better to have it and not need it than need it and not have it.
Right.
I've explained to people, I said, listen, you do know they make children's hospitals, right?
Mhm.
Just saying. Because the good thing is, hey, listen, worst case scenario, you need it. Best case scenario, you never need to use it while you're around. But at the same time, that's something for your grandkids. That's something that's still a part of your legacy. That's still something that's going to enhance your last name.
You know, you're watching TV, you see these commercials where it says, this term life policy. Tell me the difference between term and whole life policy.
Okay. So I like to use things that rhyme, right?
Good.
You got term, you have perm, right?
Right.
Your term policy lasts for a term of time. It's temporary.
Mm-hmm.
So it's less expensive because they know that it's going to have a particular cutoff.
Mm-hmm.
Another question. What percentage of term policies do you think expire without payment?
Over 50.
65.
98%.
So you basically,
What?
you 2%,
You just basically
you just giving money.
98% of people.
But you know what? But look, I don't knock term though, because you know what? It's better to have something because we never know when the Lord's going to call us home or whatever we have, right?
Right.
But as a peace of mind, the term, you're getting a lot of coverage for a more affordable price. It's less expensive to be able to cover the just in case. Just in case something happens before the kids go to college. Just in case something happens where you got to replace your income for your spouse. Just in case you need to go ahead and take care of a number of debts or bills or certain things which maybe have been taken care of. So it's just people pay for.
It has a purpose.
Do you have insurance on your phone?
No, I do not.
Do you?
I do.
You won't. You may not need it,
But just in case.
but you're paying for it.
Right.
I mean, if it wasn't legal for you to have car insurance, just there would be an abundance of people who did it. But if it wasn't forced, some people will say, well, you know what?
I'm
Just in case, I'm gonna go ahead and get this. If somebody run into me, I'll run into somebody. But you have to pick. That's an if. This is just a matter of, if something happens in this time, I want to make sure I got my affairs in order.
I got a buddy in Jacksonville who works. He's a very prominent insurance agent. I won't call his name nor the company he's affiliated with because of what he told me.
Okay.
He says that Sterling insurance is a racket.
Mm-hmm.
He said whether it is auto, life, health, renter's insurance, homeowner's insurance, one way or another, they're going to get you because it's the law. If you're a responsible adult, one way or another, you're going to pay for insurance, whether you need it or don't.
Mm-hmm.
I'm still stuck at the 98%.
Right.
Okay. So I had see. Every now and then, some people like stats. So I have some stats.
98%.
98%. Now the reason being,
just
right?
go straight into the insurance company.
They're
right in their pocket.
Because they don't pay. But then again, the reason being, term is what you have at your job.
Okay.
Term, most people are able to outlive, but that also includes smaller term periods, 10 years, 15 years, 20 years, right?
Mm-hmm.
Even 30-year policies. There's the likelihood is that you can outlive these, but just in case, right?
Be 85 or I want a 30-year term policy for dirt cheap.
Not
Nah.
because think about it, it's all based on analytics. It's all based on actuaries who are doing the math and the numbers to where the average is and so on, and there's a give and a take. Now to go back to answer your question on the permanent side, a permanent policy is designed to be able to last you for your whole life, which is why it's going to be there, right?
Mm-hmm.
These can be designed to last up to 121 years old. Now, unless you know Moses, not really making it past 121.
Grandma made it to 120. She almost made the cutoff.
And she cashed out. She cashed out, right? So they're designed to last up to 121,
mm-hmm.
right? And these also do have a cash value component, and that cash inside of the permanent policy is tax-free. Or you can access it tax-free.
So if an emergency comes up, you got your child's tuition, you got to pay something. You can borrow from the
cash value inside of.
And that's a term policy. Or
in a permanent. That's in a permanent. So the difference between the two, right? A lot of people think I can't afford insurance in general. If you can't afford it right now, because I say it's right now. Right now, what most people have is an income problem, which has led to a debt problem, which was also in relation to a savings problem. But if you're able to fix the income, it'll take care of everything else. But what is bigger than that, if you can't afford this, then what's going to happen if you're no longer here to be able to provide anything, right? So it's better to have something than to have nothing.
Mm-hmm.
Now, the benefit also is that in a lot of these policies, you can do something called, you can convert it. I tell people like between the two, it's like going from a Toyota to a Ferrari, right? The permanent policy, if designed properly, funded properly, set up a certain way, You're getting a death benefit guaranteed to go to the family. You're building up a ton of cash value that you can access tax-free. Both options include the long-term care. But let's say right now, hey, I can only afford $1 million term policy. Perfectly fine. Within the next 2 years, you say, got my money right. I want to convert a portion of my term into permanent. So let's say you take $250,000 from the term, no new blood work, no labs, no other conditions have to be met. And you can convert a portion of that into a permanent policy. So now you have $750,000 left in your term and $250,000 left in your permanent. Now, of course, you're paying for this, but the point being is you've already locked in the coverage. Right. So from the insurance company standpoint, we're on the hook for this. Mm-hmm. So now you can convert this over as your income becomes more capable of maintaining the permanent policy.
So is it safe to say that an insurance policy can promote generational, or can not necessarily insure, but it's almost like a guarantee, if you will, of generational wealth?
I'm willing to believe that. Yes.
And if, as a professional, if you had to find the lane to advise, what is the best way to develop that generational wealth through an insurance policy?
Depending on the budget, right? Because really what it comes down to, one, there's your need. Mm-hmm. Then there's, first you got to find out the need. How much insurance do you need, period? Once you have that need right there, then it's what's in the budget, right? And then find obviously what you need, then what's in the budget. The best way to guarantee it or to insure it, to give you the highest chances to have a permanent policy. Okay. Because like I said, unless you're living to 125, right? Then you're looking at a different situation, right?
Yeah.
But given the current standards of things, a permanent policy, if you have $1 million policy being funded correctly, that is a guarantee that $1 million is being passed on to your heirs tax-free.
When you said that, one of the ways that we as African Americans have been disenfranchised is misinformation or lack of resource. You look at how so many people who are not African American can afford to put their kids in college. That kid have a BMW, Porsche, Corvette. Where do you get this money from working a 9 to 5? And maybe it came from that $1 million policy you're talking about.
I read something, it was an article one time, I'm sorry to cut you up. But the greatest in the history of America, the greatest transfer of wealth was not from family member to family member.
It was through insurance.
It was through insurance.
I'm going to circle back to, if I can remember, greatest transfer of wealth. I'm going to speak to that in a different area.
Okay.
But there's a book. People were looking for information, right? What would the Rockefellers do? Phenomenal book. Mm-hmm. The Rockefellers were the second richest family. Do you know who the first was at the time?
Was it the Rothschild?
I don't know if they were there then.
Jenkins family.
The Jenkins.
43rd
Street. Boy, them,
well, you know what?
Hey, them boys make some.
So was it the Jenkins boys or the Jenkins boys?
The Jenkins.
The Jenkins.
They make some hell of a sweet potato pie. We used to sell it on Fridays.
$200 million, all pies.
All pies.
But it was the
hey, don't buy this.
That's it. But it was the Vanderbilts.
Okay.
The Vanderbilts had more money than the Rothschilds. Jesus. I mean, then the Vanderbilts had more money than the Rockefellers. Now, interestingly enough, over the course of time, I think one of the most well-known Vanderbilt family members is Conan O'Brien.
Right.
From that time when they made the money to now, money's gone. Wow. I think it was over from the times of when the Vanderbilts built up their massive wealth. I think it was like $156 million their time.
Right.
Right. The Rockefellers might have been like 147 million. Right. Didn't have a proper plan in place. The Rockefellers leveraged life insurance to not only take their wealth and to pass it on from generation to generation. They also leverage a trust. So a lot of times when you hear trust fund baby, it's not just that they accumulated all these assets and only put the assets in a trust. Those assets that are in the trust also include life insurance. So if I had $1 million policy and I designed that 500,000 of this is going to go to the family, another 500,000 is going to be buying more insurance on my heirs. So now we're purchasing more life insurance, which is more multiples of millions, which will then go on to them. And it keeps on being like I call it's kind of like a Like you ever see one of those champagne fountains where they pour into
Where
the
they pour
top,
it in, right.
and it goes from 1 glass to
To the
4
other
glasses,
without
from
wasting.
4 into 8, from 8 into 12, 12 into 20, and it keeps on spilling down. That's essentially the pipeline that they're pouring into this vehicle to be able to disperse the rest of.
They circulate money by not using their money.
So
correct?
basically, they got rich, and then they solidified the wealth with just a network of perpetuating insurance policies.
That's a major portion of it.
So is
Wow.
it what? It, Jesus Christ.
Let's
Let's
talk to
say
my granddaddy.
Yeah.
I don't know
So,
you.
look at it.
What you got going on over
Somebody's
there?
coming and collecting it.
I'm supposed to be rich by now.
And- and you
It's
know
your
what?
fault, man.
I'll get to that point in a minute as I was sitting here thinking. So let's say you have siblings,
Uh-huh.
big 4 siblings. They're young enough to start this circulation of wealth to pass on to their kids. They educate their kids, and it goes on and on. How long do you think it would take for that to develop into true family wealth?
Honestly, I say it could take place in 1 generation. It could take place in 1 generation. Because if you look at it, right, if you're thinking about depends on how soon, right? Let's just say that your parents, when you were a month old, decided to say, how much insurance can I put on you, right? And they say, I can get you $1 million policy or 500,000 because they already got $1 million on themselves. Upon their passing, that's $1 million going to you. You already have 500,000 on you. You can take a portion of that, get more insurance on you, and then purchase insurance on your kids. So now you have your parents' policy that they put on you and your own one that you put on yourself. Now you're getting more money to be able to purchase on your kids. So you're just kind of rolling one into the next.
Snowball. Snowball.
Wow.
And it just gets bigger and bigger from generation to generation. Now what the trust does is it puts, and I'm not an attorney, but I'm just, from the way that these things work, it allows you to have control for how you want money to be dispersed and operated, right?
Per stirpies.
Correct. So on my part, I tell you this, hey, listen, for any attorneys out there that are looking to get some of their clients taken care of to get more on that side, the will is great. The trust is better. And if people need more life insurance to be able to put into this, to be able to make sure these other assets are being taken care of, I don't see a greater way to be able to pass it on tax-free.
Dog,
Right.
I'm sitting here almost mad.
That's it.
Bruh,
I'm sitting here almost mad.
I'm sitting
bro,
up here,
for real.
but again, this is the difference between talking about these kind of things with somebody that's just kind of bumping their gums
Quasi familiar.
versus somebody that could give you some really solid information. Because I'm telling you, I'm sitting over here and I'm making mental notes about what I need to talk to when I get to your office next week.
Mhm.
And speaking to your office next week, how can people get a hold of you, man? Because everybody's going to listen to this, and because I'm sitting here with 1,000,001 ideas on what I want to try to get in place for me and mine.
Okay.
You know, and I can imagine that for the people listening, it's a lot of them saying, you know what, clearly I need to get something set up, something in place for my kids as we move forward. How can they get a hold of you?
Instagram is a very easy choice. I'm on there pretty often enough.
Okay.
IJS_KD.
Okay.
So it's like, I'm just saying, I don't know.
Yeah,
Somehow,
I'm just saying,
funny enough,
_KD.
when somehow someone said, how'd you get that? When you put IJS, 99% of the time I'm the first one to pop up. So IJS_KD.
Okay.
So now when you said something earlier, you were talking about, because this is like the world of life insurance is a Swiss Army knife. There's so many different ways that you can utilize it, low, middle, and high income, right? You mentioned the greatest transfer of wealth that had taken place was through life insurance, right? The greatest transfer of wealth that we've ever seen is taking place as of, I believe, like a year ago, maybe a year and a half, over the next like 10 to 20 years.
Okay.
Reason being, the baby boomer generation, as of within the last 2 years, every one of them are now at least 59 and a half years old.
Wow.
Now, of my stats, I might have these numbers a little off, but I'm pretty sure that's close to.
Okay.
The amount of wealth that has to be moved from 59 and a half until when they're over 72, 73, that has to be moved legally. It's called an RMD, which is a required minimum distribution, where they'll face a penalty for not removing certain monies from their retirement accounts, right? That amount of money in that generation being moved is nearly $68 trillion.
I'm sorry, did you say 68 million?
No.
No. That's T
So
with
not-
a
I was-
that-
I was making
Yeah.
I was making
Not-
sure I heard you
no.
say trillion.
Not in million, not billion. $68 trillion has to be moved over the course of the next 10, 20 years.
That's a lot of bread.
Now, when people are thinking about what do they want their money to do, right? And what I'm going to speak to is a life insurance product
Okay.
offered by life insurance agents
Mhm.
that are provided by life insurance carriers, right? People have what is most people's number one way of saving money for retirement today?
401k,
Correct,
Right.
right?
403b.
Now, or depending on what you work at, military TSP, government's 457A, I believe. If you're teaching, it's a 403B. All these things are just different numbers and letters that say this is retirement money, right?
Right.
It's tax deferred. That means I don't pay the taxes now, I pay it later, right?
Mhm.
So when people are looking at this, what do people really want, or what do they treasure the most in retirement? Do you think they treasure assets or income?
Income.
Income.
So when you get older, you're building up these assets because you want to turn them into an income, right?
Mhm.
What's better than an income? A guaranteed income. So right now, a lot of people are relying on what? Social Security,
Mhm.
because it's a steady paycheck every month.
Right.
What if not only can you move your money from your 401k, your 403b, your TSP, your IRA account that maybe you've been self-managing, you can move it into an account where I can guarantee you in writing that you're guaranteed not to lose a single cent, while also being able to get the growth of the market. So you're eliminating market volatility. No losses, you're getting the growth, and you can turn that income into a guaranteed paycheck for the rest of your life.
That's a mutual fund, right?
No, that is not.
What is that?
That is a fixed indexed annuity.
Wow.
So once again, IJS_KD.
Mhm.
Truly, I mean, bruh, I thought I knew a little something about something.
This man, and listen,
But truly,
it keeps going. That could be that could be next time I come around, just maybe speaking more to that. But because you said greatest wealth transfer,
Wow.
and people are thinking of what do I want to do with my money, right?
Mhm.
So if you've been at a job and you've left that job and you have a 401k, normally people do one of three things with that money. They take it, they roll it over, right? They take it from where it's at, they move it to the next job.
Right.
They cash it out, which means they pay the taxes on it right then and they don't have it anymore. Or they just leave it where it's at. But what's the point of leaving it where it's at? What's the point of even having that money? If it's for retirement, what do you want your money to do for your retirement? You want it to be there.
Mhm.
You don't want to lose any
Yeah,
of
you
it.
wanted to grow more than
And
anything.
you want it to grow.
Right.
So as a conversation, if anybody's looking for, okay, what are my options? I got some money from my account, or maybe you even rolled money over from one account to the next. And this is something new I learned, right? If you move that money from, let's say you were working at Publix 20 years. You leave Publix, you got your 401k, and now you roll it over. And let's say now you're working at Target. You're working there for 10 years.
Mhm.
That money that you had from Publix that is now sitting with Target, you may still be able to take that money and lock it up and put it into another account. Because right now, with it sitting with Target, it's exposed to the market,
And it's subject to loss.
subject to loss. So I just ask you one question. How much are you willing to lose?
I'm not willing to lose
Zip.
anything.
So where it's at right now, you're subject to
Potentially
the market.
Right.
I personally looked at my 401k when I was working in corporate.
Mhm.
During the pandemic, I lost about 40%. Right? Now, markets recover.
Right.
Accounts don't always. So some people bounce back fast and others took a longer time. But are you willing to risk waiting for something to get back when you could have the option of just peace of mind? I don't have to worry about what the market does.
So on one hand, you have the if or maybe.
Mhm.
On the other hand, you got a guarantee.
I'm in the
That's a
business.
no-brainer.
I'm in the business of guarantees.
That's a no-brainer. That's a no-brainer.
So that was something that I just had a quick pivot over when you mentioned that. I wanted to mention that as an additional added value and service that a properly coached and trained life insurance individual could explain.
This guy. So, man, with the advent of social media, it's definitely made the world a smaller place.
Mhm.
I've been more inclined to, when I see these posts, I lost my grandmother, my aunt, my brother, sister. Can you please donate to the GoFundMe? I can be more readily inclined to give to a stranger before I can someone I know, because someone I know, I see you buying a Jordan, you got a new car, you putting all this stuff in your house, and you didn't do your due diligence as a mature person and handle your business and talk to a trained professional. These GoFundMe accounts on Facebook, Instagram, how do you feel about those?
It's unfortunate that something that was designed to be able to help products, businesses, and launches has now become a crutch for individuals to be able to handle their family members, friends, in one of the most challenging times that they've ever faced in life. Right. Now, the number one campaign on GoFundMe, and maybe the two are interchangeable: funerals. Number two, medical costs. You know what life insurance that's in hybrid life insurance, what it could solve?
Both of them.
Funerals
And
and medical costs.
what a coincidence.
Now,
Look at him. Look at God.
so I literally
Look at
tell
God.
people that the permanent life insurance policy can be a anti-GoFundMe plan.
Say that one more again.
A permanent, properly structured life insurance policy can be a anti-GoFundMe policy.
Sorry.
One more time for the people
That's
in the
it.
back.
One more time.
A properly structured permanent life insurance policy can serve as an anti-GoFundMe policy.
Well,
In
that's
the
that's
words
the
of the divine line, proper pre-planning prevents piss poor performance. That's
is for
it.
perform. Oh,
Keep it going.
never mind.
Yeah, man. Man, listen, man.
If you had to, this is not a quote. This is only an estimation for entertainment purposes only. If you had to estimate what it would cost per month for someone between the ages of 35 to maybe 50 to invest in a life insurance policy for their well-being, for it to be the anti-GoFundMe campaign, how much per month would it cost if you had to estimate?
Because it always varies. That's the thing about it, right? Because one, and this is something that, something else came to mind, right? One, life insurance policies are less expensive for women. That's
we do stupid stuff.
That's just maybe they outlive us, right? So that's one thing, and of course it's based on age.
They
Right.
kill us.
And right.
They worry us to death. That's
Paul said that. I
They
mean,
worry us to death. You did.
So you can't just go purchase life insurance like a cup of coffee. You can't just go and say, hey, I want 2 perms and a term and
it's definitely
add a little
2 perms in a term.
You get 2 perms in a term, It doesn't work. It's not
whatever
that
you
simple.
for here to go.
Yeah, right. I'm here for the long term, right? So it's not that simple. It's an application process, right? So if there's pre-existing conditions, if you have a suspended driver's license, if you have a number of misdemeanors and felonies, like there is a application process for them to then say, hey, we'll go ahead and give you tens of thousands, hundreds of thousands, millions of dollars based on certain things. So it can vary. I've seen kids policies, you can get $100,000 of coverage for $15, $20, $25, $30 starting, right? I've seen just final expense policies for our elderly just to get something. Hey, I want to get something out of what I have out of here. Okay, it's $80 for $15,000, $20,000 to cover. Let me at least cover the burial because I got my other affairs in order. It can always vary, but the sooner that you get it, the better off that you're going to be.
So here's a question. For so long, there have been chronic diseases and illnesses that would prevent you from getting an insurance policy. One specifically will be HIV and AIDS. Is it possible for someone with HIV or AIDS to get a life insurance policy?
I believe there are policies out there called guaranteed issue, which some carriers are able to offer, but they're extremely limited.
Okay.
So you may be able to get a certain amount that you can afford, but at the same time,
Something's
I don't want to
better than
misspeak
nothing.
yet. Something's better than nothing, but there's a possibility that sometimes.
All right, so don't hold Katie to that.
Yeah, that's what I'm saying.
Entertainment
Right. Like I would look to say, look, very, very unlikely or very, very scarce, very unlikely that you'd be able to do that because what are the odds?
Right.
They're thinking of what am I gonna from a company standpoint, what am I going to receive before the chances that I'm paying out?
Mhm.
Is it even going to make sense
Right.
to be able to have that given that condition?
Right.
Now, there are conditions that can be accounted for. Like, for example, there are people with diabetes.
Mhm.
They're able to get insurance, just depending on the level of it. Now, is it diabetes? Are you taking insulin? Are you not taking insulin? Have you been off it for a while? There's a lot of things.
Ifs and then.
There's height and weight. You know, had a client, okay, 6'1", okay, pretty tall, 370.
It's a problem.
Unable to find a carrier to be able to fit them until they get the weight under control. Or it's like, okay, 5'1", 260. Like, there's just a certain balance that comes with height and weight that is a factor within these application processes.
Right.
So is that something new? Because that's something I always had. One of my biggest criticism of the insurance industry as a whole. You know, you'll have these insurance companies sit there and collect these premiums for people for years. And then, you know, young guy start working at a factory somewhere in a blue collar state at 25 years old, get insurance, they basically throw it at him.
Mm-hmm.
He's sitting there paying premium for 30 years. At 55, he has a heart attack. And instead of paying out, they want to send watchdogs back through his medical history to find any kind of pre-existing condition that would allow them a loophole to paying. So a lot of people made insurance companies out to be these big bad guys that they want to get your money, but they don't want to give you none. So in your opinion, how has that changed across the industry? What parameters are there to kind of govern that better? And I'm assuming that policies like this that we're talking about is one of those things where I would prefer them to do their due diligence up front and either approve me or deny me than to just blanketly give me a quick yes in the beginning.
And then rescind that yes.
Let me pay for 30 years and then
by the way,
you had Road Dog said you had heart murmurs at 18, which basically would have made you null and void. So we just gonna cancel your policy now.
Well, I can only speak to the carriers that I work with, right?
Okay.
Because let's say it's a long list of them. You know, when we sit down, I can go over it, right? Because the good thing is too, on top of that, when you have the ability to shop around, it's not necessarily, if somebody only has one thing, of course they can say, hey, this is the best thing, but it may not be the best thing for you. It just may be the best thing that they can offer.
Right.
So when you're able to shop around, okay, I can go to this carrier or this carrier or this carrier and find a fit, right? That makes a lot of sense. But in that, what you were saying, there's a contestability period, which is normally 2 years. So if something were to happen from 2 years of the inception, of the start date of the policy, they'll go through and they'll fine tooth comb. They want to make sure, is the risk that we accepted, did it go through accordingly, right? So they're just going to pretty much dot their I's and cross their T's. If you were to make an investment with, hey, listen, this is what I'm going to give you in this case. If something's up within this period of time, I just want to make sure that it is what it is.
Right.
But if something does get discovered, in which case if they had known, they would not have proceeded with, then they could refund you the premiums that they received and void the policy, right? Beyond that, it's a lot more open when you make it past that 2 year period, where I personally haven't seen that situation or that thing happen. Because as long as everything is done, the due diligence and the upfrontness is done upfront, then you shouldn't have to worry about those things on the back end.
Suicide is real in our society. And unfortunately, I think we all know someone who has succumbed to suicide. When it comes to that policy, are there rescissions or even nullifications that can be made as a result of suicide?
I would say that if I were to make if somebody had if you had homeowners insurance, fire coverage is covered.
Right.
If, as we're seeing out in LA, right, fires are started, if you have homeowners insurance, that's covered. Would that homeowners policy pay out if you set your own house on fire?
No. Understandable. Got it.
So,
and man, there's a big company, again, I'm not going to call his name, who dropped their homeowners policies out in California before these fires. Shame on you.
It's tough. And I came from property and casualty.
Okay.
I came from property and casualty. I did that for quite some time. And companies, you're managing risk, right? And it's unfortunate when the timing can look a little funny. But I know with the carrier that I was with, phenomenal company when I was there, for a long period of time, they did not insure homes in Florida. Like they did. And then when they felt like they had over a saturation of risk, hurricane can come through. How much will this hurt the entire company if something were to happen to something this big? So they stopped, and they stopped providing coverage for a stretch of time until they felt, you know what? I think we can. We slowly open up, and then after a while, and then we had that gap of time between I think 2005, 2006 up until let's say 20. How long was it? 2016. I think we didn't have a hurricane from like 05 to like 2016, right?
Right.
So it was like, okay, at first it was, you know what? Hey, it's been a while. It's kind of
open the doors.
That first hurricane came out, shut it down.
Right.
Clink, clink, locked it up.
The funny thing, 2005 was the year Charlie, Jean, and Francis came through Central Florida.
See?
That was the year I bought my first home. Bruh.
Interesting times.
That homeowner's insurance. They whammed you over the head.
Thank God, bro. I didn't have not one claim during all 3 hurricanes. Well, none that I actually filed.
I got you.
Fair.
They messed up my palm trees, though. I want my palm tree back. I do want that. State Farm.
Come on, bro. Don't do them like this, yo.
Give him a palm tree money
there
back.
goes a sponsorship. No,
Yeah, man. But man, definitely, bro. It's been great information.
Yeah,
More than just nuggets, man. You giving some true meat. I would dare to say this is too much information. We really just peel back one layer of the insurance onion.
But because conversations like this, you can always have a broad spectrum conversation, but it can go in an infinite amount of tangents when people bring in their own personal situations,
Correct.
This is mine. So I need, like you said, you just tailor fit it to the need of the specific person. And I think that right there in a nutshell is the difference between a cookie cutter policy and talking to somebody that can get you something tailor fitted for exactly what you need.
I've even said something. If you're so confident about the first opinion, you shouldn't mind getting a second.
So before I put this out, let me ask, would you be willing to come back to Bald Head Barbershop?
Absolutely.
So check this out. I'm sure you have questions. You wait until I'm going to the wrap up to see you got a question. IEP has a question. What you got, man?
Hey, man. So what one piece of advice would you give anybody with no insurance on an elderly loved one today?
What is one piece of advice that I would give someone with no insurance for an elderly loved one? If they've made it to that elder status without pre-existing conditions, then they're still able to get some kind of permanent insurance. At the very best, a whole life product, because then you can still see about purchasing more and getting that. But of course, like I said, older in age, the more that it's going to cost, because as we get up, there's the likelihood of how soon is that going to be exercised? Like how soon is it going to be paid out? At the very least, seeing if you can afford at least a final expense policy, which could be up to some carriers, $25,000, other carriers, $50,000. Now, I mean, with the way inflation is set up and looking at certain things, even cremations are going up, right? So if you're paying $12,000, $15,000 for a cremation, if you're thinking about it, we just want to make sure that the final expenses are covered, right? I would say let's at least do that and see what can be taken care of, at least on that end. Because what we're talking about here, right, is something else. I said that what life insurance is and what long-term care is, but what it does is life insurance can allow people to grieve properly. So I know we're wrapping up.
No, we're not wrapping up now, bro. Because look at what surprise.
Right.
The beat goes on right here on the Bald Head Barbershop. I got a couple of friends who are funeral directors. One of which has said they are trained once you're emotionally vulnerable, they want to take advantage and exploit you when you're at your weakest.
Wow.
You know what?
They train?
They are trained. Bruh, there is a script. Basically, one of my friends told me there's basically scripting, specific words they use to tug on your heartstrings for you to make that decision while you're emotionally vulnerable. For you to maximize that dollar. He is there to get that dollar out of your pocket.
Wow. I know you're grieving right now, but you don't want to have no cheap suit on.
But
that's the last thing. That's the last time you're going to see you. You want to get a cheap suit?
But think about it. What you're saying off that note You know, I know you love your mama. Your mama's favorite color, I'm sure, was not. We got this brass colored casket. Your mom's favorite color was pink. We have a beautiful pink casket, and your mom will be beautiful in. So what we're gonna do is give blah 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 blah. So now during that vulnerability, yeah, put mom in that. I want to see mom in that.
Mhm.
Man,
Now I'm back to the I burn them for you.
Yeah.
You gotta pay nobody to burn them.
set them up in the backyard.
Right.
Right,
Is that
I got
chicken
that
roasted?
5 pit in the backyard. Bring Granny out here.
You,
That's
you know what?
You
bring
know.
Granny out here.
You might be going to hell for that.
Just-
You might be going to hell for that.
So,
What you say her name was? Inez. What time for Inez? Before we fire this thing up, boy. You got the ribs marinade, bro?
Paul's barbecue and
Paul's
crematorium
barbecue.
open on Friday, Saturdays, and Sundays. You know, don't come on Mondays. You got grandma
Hey,
back there roasting.
Mexican street corn. That's
Wow.
it, man. That's messed up.
Why?
Oh,
I
right.
know, man. But listen, man, for real though.
Mhm.
But I mean, all jokes aside, man, these are the things that you have to. Proper pre-planning prevents piss poor performance.
Mhm.
We gotta think about these things more. We gotta reach out to people like KD to find out what tools are out there that can benefit us the most according to our current situation.
Before we wrap it up, I got to throw this one out there. The acronym DIME.
Okay.
Can you tell them about DIME?
Yes. So earlier I mentioned you have to find out how much insurance do you actually need,
Mhm.
right? And there's DIME and there's even DIME, right? It's an L on the end. So
Okay.
DIME and L. D is debt. How much debt do you want to make sure that's being accounted for? That's going to be passed on, because there's some student loan debt that's going with you,
Mhm.
and there's some that's not. Credit cards, any other kinds of debt, we want to make sure that that's being accounted for, so that that's something that's not being passed on to the family, right?
Right.
I is income, because you want to be able to replace your income. Normally, I say rule of thumb, let's say it's like 8 to 12, but just go by 10.
Mhm.
So whatever you're making, 10x, right? M is for your mortgage. You want to make sure that the house, at least the house, is being taken care of. Or maybe you're renting. How many years do you want to make sure that your family can maintain the lifestyle that you've currently been able to provide while being there for them?
Mhm.
And then E is for education, right? So the education is how many kids? What's college going to cost? Maybe 100,000. Maybe they don't decide to go to college. Still a business, still some form, maybe a trade school. But the point being is you want to make sure that money is there for them. And the L is the long-term care. So if everything else is taken care of and accounted for, you might have one policy or multiple policies where I'm going to use this to cover the dime, and the L I want to have is my long-term care safety net. So if nothing happens to me, that's just more going to the family. So it could be legacy, or if something happens to me where I need it, I can utilize it for the long-term care.
Man, listen. Man, you are now a friend of the Bald Head Barbershop. We'll definitely be having you back. If you have specific questions that maybe you want
Because
to.
I didn't even get to ask him about what I
Wait,
really
wait.
wanted
Oh,
to
save
talk
it.
about.
Wait, save it for my man said he coming back. So guess
Sure.
what?
Yeah. How to set the kids up on one of those policies where
Okay.
they can grow up. I can set it up for her as a kid,
Mhm.
and by the time she gets to be an adult, she can use that policy as her own little private bank.
Before you answer that,
I wasn't even going to answer. I was going to say, so if you've
Wait,
heard of,
wait.
I was going to say, if you heard, I wasn't going to even answer it.
okay?
But if you've heard of the Be Your Own Bank, if you've heard of infinite banking,
Right.
if you heard of being able to use cash in your life insurance policy to do things,
Right.
the next time we come back around, we'll maybe go into that as far
That's
as speaking
what
to
I
how
wanted to
those
talk
things can be
about.
designed and why they work that way.
Well, you walking heavy. So here's what we're gonna do. I know somebody's thinking about their child, or for the demographic that watches us most frequently, you're thinking about your grandchild. For the information, the questions you may have, IJS _KD. If you have a specific question, if you know me personally, you want to give it to me, I'll make sure to give it to him. Or if you have a question you want to submit for the next time, Brother KD is here. Hit Paul, hit myself on Instagram. Y'all would be more than happy to take care of you.
Yeah.
I'd like to leave you with a final thought. As sure as you live, you will die. Death itself defines life. If something never dies, that means it never lived. You're living this life, so surely you will die. Sounds morbid, but it's true. So here's where we are. Instead of thinking of the things you wouldn't be caught dead with, think of the one thing you can't be dead without: life insurance. For Paul Rivers, Katie, Sterling Stevenson, this is the Bald Headed Barbershop.
Yeah.
Thanks for coming out. God bless. Good night.
Peace.